Hey, what is up guys, welcome back to ProTraderPath. Today I'm back with another video. Yesterday I had two trades, but I was so tired after returning from work. I actually did not wait until both of my trades actually hit the take profit target. I closed it earlier in profit, but that's why since I closed earlier I didn't upload any video. But before I get to today's part, I will show you something. The market gonna reverse from this daily fair value gap or not, but as I'm saying, like, I'm expecting price may go to the 75% level, and since it's daily, depending on where the daily candle closes. So that was a short recap from my previous day's video that I was talking about. And yeah, so when I returned home from work, price was around this level. Okay, then I saw price took the liquidity inside of the daily bearish breaker block, that black area, and that's also the daily fair value gap, and that line is the 75% line. If I go to a higher time frame, you will see like that's the 75%. That's how far price went. And as I was saying, this daily bearish breaker block, price actually reacted from that breaker block after taking this liquidity. Now what happened here is there is this low. Okay, although this is not the swing low I usually look for, but there is this low that traded into a volume imbalance and then went for the liquidity grab. So when market came impulsively below that level here and created a fair value gap around this level, okay, that could have been my entry. Now I usually mark from the lowest to highest level for a fair value gap, but since if you see this candle's opening, it has some sort of volume imbalance right up there. That's why if you see, like, the distance of that volume imbalance is actually the distance here on the wick. So I just marked this as my fair value. It's not optimal, but I'm just making it clear for you guys, like, why I look at certain things like that. Okay, so price went there, came below, but since I was not expecting or anticipating this as my swing low or as my market structure shift, I didn't consider entering there. However, I was considering when I saw this market structure shift. Okay, this market structure shift left this small little fair value, but you see, like, two candles with a huge wick and a huge body on the next candle. Price came from there to there straight away within two minutes candle. So this entry would look something very crazy, but anyway, I don't want to go there. So I was waiting for price to go back and retest this fair value, since that's the only fair value price created during this entire run. As you can see, like, there is no fair value. Okay, so I was anticipating price to go back to that level. However, when I saw price is reacting from there, I straight away went to a higher time frame than 1 minute, which is, like, in this case 2 minutes time frame, and I saw this huge fair value gap, and price with this wick traded the 25% level and then started reacting. You see the 25% level reaction? Just look at the reaction on the 25% level. Beautiful, right? So when I saw that, I dropped down to 1 minute one more time, and then I wanted to take this entry on this level. However, when I saw that on its way up, market created this inversion fair value, which can act as a bearish inversion fair value. Okay, why? The immediate next candle partially filled up the fair value that didn't go below the consequent encouragement, and this filled up a higher time frame point of interest. As I'm saying, the 2 minutes fair value gap, 25% up to the 25% level. So this one delivered as my inversion fair value gap. So two things can happen with the inversion fair value: immediate next candle fill up and it go grab a liquidity or balance up some imbalances. Okay, so in this case it balanced up the imbalance on the higher time frame, higher than 1 minute. Okay, don't get me wrong, it's not a good example, but that's what I was looking for. So instead of taking entry here, I was waiting how price reacts on this fair value gap, and if price goes below and closes below, then I will consider entering into a short trade. So that happened right here on the next candle. As you can see, I entered into a trade. Okay, now this is not the trade you should take. because in this time anything can happen, price can still continue for a higher level, right? I took this aggressive entry because I saw this fair value gap reaction. Okay, price perfectly traded the fair value and closed below and then started coming lower, so that's why I took this entry. But this is not the optimal entry point. The optimal entry point is price went up above that, closed inside. Now that's a good indication. Now we wait for price to come back, and then when it retests you can enter. Okay, that's your optimal trade entry. And if you entered on this candle, then this time your stop loss should be around this level, not higher than the swing that it created on the retest. Okay, and that also covers your order block here. Anyway, and this, with this sort of liquidity, it could give me 1.78. however, since I entered here, I actually put my stop loss around this level. It's not a very good entry, but the amount I got is not a bad amount for me. That's why I didn't like, this is a short scalping. Before my silver bullet starts, I found this opportunity, I took that opportunity. Don't get me wrong, it actually, if I targeted this, it went below that as well without hitting my stop loss. Okay, so it went below that as well. I already got some profit over there. But the next entry that I took was very greedy entry, and this is a lesson that I learned, and that's why I didn't close the entry or position when I was in profit. Okay, I had the opportunity to close, but I didn't close. Why? Is because when price came below again, that is your another break of structure you can call. Okay, swing low, displacement below that, and created this fair value gap, this specific fair value gap. Okay, although I have it bullish inversion marked, but I will explain why. So remember that immediate next candles fill. Okay, what happens over there? Price tapped into the fair value gap with immediate next candle and then took a major liquidity from left. As you can see, I had it marked for a long time. However, I didn't mark with this yellow line and this box. I had it until this level. Okay, I didn't had it extended like that, since I recorded the entire video before and I noticed that I don't have my microphone on, so I'm starting all over again. Anyway, so that's a major swing low for a long period of time. As you can see, like what happened right after those areas. Okay, I'm just showing you in a short manner. Just look how far it went from that area. So it's a very major liquidity over there. So in this case, two mistakes that I made was, firstly, I didn't target this one or this one, because price already took the liquidity and then it started going up. So I could have waited for a market structure shift or a possible reversal entry, and it was just a minute before my silver bullet time starts. Okay, so just 1 minute before my silver bullet time. That was not a good entry. Okay, it could have been a good entry because I entered at this week, as you can see, like where I entered. So that's the highest level the price went, and I entered around this level. Okay, so in this case my entry was looking something like this. I entered around this level. Okay, let's see. Yep, so that's where I entered. As you can see, the arrow right below my mouse pointer, and the stop loss was right above this fair value gap candles high. Okay, here, as you can see, that's where I got stopped out. Just look where I got stopped out and where the arrow is. I hope you can see it, not on my mouse pointer, but just look here, like that's where I got stopped out. Anyway, but what happened here is the stop loss was good, everything was good, but instead of targeting, I targeted 1 to 2 because I thought, okay, I thought market gonna go and take this liquidity, and I didn't have this one extended like that. Okay, I had it sitting right there, and this yellow line was not there. I draw these lines during my previous video that I recorded without audio, so I am recording it again, and I kept those lines so that I can make this on short. So what is this? There is this fair value gap and a volume imbalance right there. Okay, you see the fair value and volume imbalance that price respected multiple times. How far price went is exactly on this yellow line, and if you look at the left, there is an order block sitting inside of that area, and there is until this liquidity level. Okay, That's a swing low, swing low, swing low, swing low, lot of lows over there. Okay, why I'm not considering, like I shouldn't have considered the lowest level? Why? Is because when price went up, it went up for this high. Okay, like just look how far it went from those levels, like the lowest level to that level, how far it went. Okay, so when this move happened, people who entered on the lower liquidity levels like these areas, they have already got their profit, or maybe moved their stop loss into a take profit level or even break even levels. So the highest liquidity or higher possibility of liquidity was sitting around these areas, because that's where market reacted the most. Okay, this is why market took a middle liquidity, then started going up. Now let's not look what happened here, let's look what happened inside of silver bullet. So since I was still, like my silver bullet started, and this was my first silver bullet fair value gap. Okay, so when price came to that fair value gap, let me take this one off. When price came into that fair value gap, it actually traded and closed above. Remember, I'm still in a trade, and where it closed, I was still in profit where the price closed. But since it did not respect this, it became my bullish inversion fair value. Okay, and price did not take any liquidity or anything here. So now it became my bullish inversion fair value. I could have entered into this, like on this candle, on this retracement right after seeing this closer, or since I was in a trade, I could exit out from my trade. But where was my stop loss? Right here. Okay, I had still room to go, but this is a possible reversal indication that price did not respect this, so market may reverse right now. And what happened on the left or before this move is market took a liquidity from higher time frame level, you see here, and it took a immediate liquidity from its swing low, and it gave a market structure shift by this candle. So I could have exited on this candle as well. I had a lot of chances to stop, get out of the trade. Let's say like I didn't consider this one. Okay, I didn't consider this, but when market came, tapped into that fair value exactly over there, and then closed as a green candle, that indication was pretty clear that you should not be into the trade. But anyway, I wanted to be wrong so that I can journal it, and I was pretty confident that I will get more opportunities. Now what happened is, I did not enter here because I was already in a trade. I did not enter here because I was already in a trade, like I just got that stop loss. Now by the time I calculate everything, market already started going up from this fair value gap. Okay, so during the silver bullet, you should look into your first fair value gap, and you see, if you see market is respecting that, you enter into a trade. If you see market is disrespecting that side, you enter into the opposite trade using that exact fair value as a inversion fair value. So what happened here, market did not respect it, straight through the candle came to retest, it straight away went and closed above. So now you use it as your inversion fair value. Entry could look something like this. Okay, or let's say if you take already placed your limit order here, you took the loss here, you try to look for buy side liquidities next. Okay, so your sell side, you took a loss, immediately switch to buy side, because it took higher time frame liquidity, it took recent liquidity, it gave you market structure shift with fair value gaps here, fair value gap here. Okay, and mostly the fair value gap that aligns with your displacement or your breaker block candle, that is where you should consider going for a long. Anyway, so there is this fair value that I couldn't enter because I was already into a trade. Now when market gave a break of structure right here, this is where I found another fair value. Okay, and I had this fair value marked from earlier with this liquidity. So that's my buy side liquidity, as you can see exactly where I took the exit. You can see like the arrow is right below my mouse pointer. So that's my liquidity level that I took, and here is this one, because that may work as my bullish inversion fair value later on, like when price goes above that and retest that, it can work. So as you can see, like price went above that, closed above that, retested, now it acted as a bullish inversion fair value, and that's going for higher liquidity levels. Okay, it can go even higher, but anyway, I don't really need to talk about this far because that's where my silver bullet ends. Although here I was expecting price to go little higher than this, but what price did is price created equal high, came back for this fair value gap. Let me mark it. Too many marks, I know it might be confusing, but price came to that fair value, respected, started going up. So on this fair value you could even enter one more time. If not this fair value, you could enter here because there is a displacement with fair value gap. Price came back, respected that, started going up higher. That was also inside of the silver bullet, so if I wanted I could take more trades, but today I already made a huge profit with this trade because I had lots of positions over there. As you can see here, I took the first entry on inside of this fair value gap. The second entry I took, or I added, like when I saw market came inside of this order block plus fair value. Let me remove this one, that's my order block. Price went up, I took the entry inside of this fair value gap, immediate fair value instead of the lower one. That's the wrong thing, but I did it because I saw this sort of reaction, that's why I took the entry. However, market came below, came to this small little fair value and the order block, and as you can see I have templates saved as order block plus fair value. Whenever a order block creates a fair value gap, I mark with the opening price of that order block until the fair value gap. So that's my order block plus fair value. And remember that inversion fair value that I was talking about, it was right around this level. So price tapped into exactly on that level because the order block high is there, order block's opening is there, inversion fair value is there, my fair value is here. Okay, but what actually price did is, even though price came inside of this the first time, it closed inside of this fair value gap. You see, it came back to that fair value. So that's the indication that market still wants to go up high because it's actually respecting both of the fair value gaps. So I was thinking to enter, if I get entry I will enter here because I already had 3 positions over there. Okay, 3 lots over there, which is nearly 1.3% or something of my wallet balance. So when I saw all this, I took my first entry. When I saw price reacting here from here, but it's closing inside of the first fair value, I placed my order right on this order block line. If I put my mouse pointer, you can see there is a small little arrow. I hope you can see it. I hope you can see the arrow right there. Okay, so I put my entry over here, a stop loss right below the order block because that's the confluence. So that's my order block, that's my exit. It gives me 3.43, and how much I need to spend or invest on this one, that's 0.34% only. Remember, I'm already in a trade that is showing me some loss or drawdown around this level. So 2 entry, it made me average around the 0.5% level. Okay, it's in my live recording, you will see that at the end of the video part, and targeted that this level because of the fair value. That's the highest level that price filled, and if it wants to go up there, it will go above this one. That's what my thought process was. Okay, this target had another confluence that I just remembered. Okay, you see this yellow box, this is today's opening gap. Okay, opening gap range is this one. Anyway, I was expecting this reversal, that's why I considered the first short trade. Now when silver bullet happened, I already took a loss because I didn't wait for 1 more minute and see this sort of candle reaction. If I saw that, the thing or the day could have been completely different and even more profitable anyway. But yeah, so that's the opening day gap or opening gap range. So that's why I was thinking of my long trades, and also price already took the major liquidities from these levels. So I hope my explanation makes sense to you guys. If it makes sense, consider subscribing to the channel, and I wanted to make this a short video. I don't know how short it is, but anyway, yeah, subscribe to the channel. Let me know in the comment box how it feels, or if you actually liked my honesty or not, because I made myself look like a fool or greedy right there on my losing trade. I explained why I shouldn't have taken the trade. Because I lose the trade, now my journaling became very clear that you should not break your rules. But luckily I didn't put my entire 1% over there, because of the level I was targeting. I was not, I was not too confident about this trade. That's why I didn't put my 1%. However, I was pretty confident about this trade. That's why I added position when I saw price coming below and closing inside of the same fair value gap. Okay, so that's why I added more positions right here. It's done already. I have gained over 3.25% on my account. The exact amount is 3.2532%. okay, but I don't need to go for 4 decimal points. So 3.25% gain in 90 minutes. Okay, so whatever it took for my all 3 trades, the video might be longer than that anyway. So yeah, without any further ado, until next time, enjoy the rest of your day. Take a very good care of yourself, your health and your family. Bye bye.